Hi, welcome to our Daily Horizon View, and the date today is the 12th of the 4th, 2019. And as always, we're doing our top fives for the ASX Exchange Traded Funds. Our spotlight today is ASX RDV, which is a Russell Investments High Dividend Australia Shares ETF. Bam! Quick overview of the markets. We closed out 0.84% up, which is 63.47. Pretty much everything was in the green except materials and healthcare. They were still left in the toilet. We had gold and silver down, platinum up, iron ore still shooting the lights out, and crude just doing what crude does, just ticking along, making me pay more for fuel at the pump. Top 5 percentage rises. We had Gear, QFN, OZF, MVS, RDV, which is a highlight today. So we had Gear, which is the beta shares geared Australia equity fund, and that's hedged as well. That was up 1.75%, which was 40 cents. Lowish volume, almost 5,000 traded today. Top 5 percentage falls. We had MNRS, QR, CNU, QAU, and ETP MPM, which is the usual tongue twister. Our beta shares gold miners ETF, that is MNRS, and that's currency hedge and tracks the NASDAQ Global Gold Miners Index, and that is ex-Australia. So down 2.31%, which is 9 cents on reasonable volume, 75,000. Top $5 rises. IVV, SPY, IJH, BTS, and 8200. So as most people will know, IVV is the iShares S&P 500 ETF, and that seeks results that correspond to the price and yield performance of the US large cap stock market, which is the S&P 500. $2.14 up, which equates to a 0.53% percentage rise. Reasonable volume, 16K. Move on. Top $5 falls. We had ET, PM, Cure, ETP, MPD, IJX, and ILB. ETPMPM is the ETF's physical precious metals basket, and that's backed by physical precious metals held in the HSBC Bank in the United States of America. Down $1.48, which is 1.03% on a volume of 116, which is not much at all, minuscule. Moving along, top 5 number of trades. We had VAS, STW, IVV, VTS, VAP, a lot of the usual suspects, the big in the town. So VAS was up 61 cents, and that's a percentage change of 0.78%. Trades looks like roughly double. STW at 232. So a few people looking to get exposure to the Vanguard Australia Share Index ETF, which tracks the S&P ASX 300, and you're looking at about $3.4 billion market cap of that ETF, VAS. Top 5 for volume, we're looking at QFN, VAE, STW, MNRS, and CNew. So for those who follow along a bit, QFN is the beta shares. S&P ASX 200 financial sector. We're up on that one 14 cents, which equates to 1.34%. Volume, 205,000 units sold. Top 5 for value. Let's see what we've got coming up. VAE, IVV, STW, VAS, VGS. So VAE, which is the Vanguard FTSE Australia Ex Japan Share Index, and that one invests predominantly all of its assets in securities, including the index. So obviously Asia focused, that one. You get a dividend yield of about 2.62%, and that one has a market cap of 141 million, so there's a few punters in that one. Total value traded today was a little over $11 million. Moving on. So our spotlight today is the ASX RVD Russell Investments High Yield Australia Share ETF. So RVD seeks to track the Russell Australia High Dividend Index, which comprises Australian blue chip companies with the bias towards those that have a high expected dividend yield, but also meet other criteria like a good history of paying dividends, dividend growth, and consistent earnings. The fund invests in a diversified portfolio of Australian shares and trusts listed on the Australian ASX with the main aim of delivering income through higher dividends and franking credits, as well as capital growth to investors. We had the net asset values of 28.48, and that is trading in line with the current value of 28.48. We had our management costs, which are quite reasonable, at 0.34%. We have a distribution frequency of January, April, July, and October, which is quarterly. We had a dividend yield of 7.17%. The Russell High Yield Dividend Australian Share ETF is a sound option for investors seeking yield at a low cost. As I said, I think the management cost is pretty reasonable. It also uses consensus dividend forecasts, which helps reduce the risk of dividend traps. So we don't want to have ETFs that actually are holding on to companies that aren't going to pay a good dividend in the coming 6 months or 12 months. So they need to have a decent model to make sure that those underlying companies aren't purchased or moved out of the ETF and others have replaced it. So as mentioned before, RDV tracks the Russell Australia High Dividend Index, which uses a systematic approach to target a diversified portfolio of Australian equities with above market dividends, because that's what we're after for this fund, dividends. So I have considered purchasing this ETF as part of my passive income portfolio. However, I decided against doing so because I thought there were better options in the market. So for reference, RDV is highly rated by Morningstar, so I would suggest the viewers to give it a closer look And alternatives or comparisons to be made can be done so by looking at VHY and SYI. They're all reasonably good options as well. So having a quick look, since inception, it hasn't done the best. I mean, where are we? Total returns, not too bad, I suppose, 7.2%. You're getting a reasonable average little dividend there at 5.66%. So it holds Combank, Westpac, National, ANZ, BHP, Telstra, FMG, Harvey Normals, Magellan, Bank of Queensland. Out of those top 10, I personally hold Commonwealth Bank, Westpac, FMG and Magellan, and they are all good dividend spinners for me outside my ETF investing. So as always, this is not promoting any particular product, only advice, because I don't know your financial situation, and we always need to have those type of things taken into account. So our job here is to crack your financial sky. We want to educate people and motivate and get them investing for themselves, take away a little bit of the scare factor. So if you like what we're up to, give us a thumbs up and give us a subscribe, greatly appreciated. As always, if you have anything in suggestions or things that we should have a look at, I'm happy to do some research and do a little recommendation. So just leave us a comment. Thanks, guys. Have a good day. Ciao.